How are you, folks? Enzo DiCasino podcast. We're going to talk about preferred stock today and a couple of those management consulting problems. Okay, so that's what we're going to do today. Okay, folks. So actually, we were going to talk about this earlier in the semester and didn't, and we're going to talk about it now. What preferred stock is, and this has come up in one of the transactions that we're working on. There's two types of equity: common stock and preferred stock. So preferred shareholders have a higher claim to dividends or asset distribution than common shareholders. The details depend on really depend on the country that you're in, because there's different. There's the Greek SEC, the European version, Italy, us. Okay, so it's basically who has the claim on the distributions of selling the company and getting paid first and things of that nature from the earnings. And they usually have no or limited voting rights in the corporate governance. In the event of liquidation, the preferred stakeholders' claim on assets is greater than the common stockholders, but less than bondholders. Okay, I guess I suppose the bondholders go first, and then preferred, and then common. I think it goes like that in America. And preferred stock has characteristics of bonds and common stock. I think Warren Buffett, when he helped bail out Goldman Sachs, this is the deal he got, where he got a part of the earnings, and then his shares converted to common shares at some point, and then they just rode the market basically. So that's the genius of that guy. Preferred shareholders have priority over common stock when it comes to dividends, and which generally yield more than common stock. Okay, and can be paid monthly or quarterly. The dividends can be fixed or set to a benchmark, and a quota is a percentage in the issuing description. So again, it's the legal deal that you make with the company in terms of what to get in terms of the earnings. There could be adjustable rate shares that are specify certain factors that influence the dividend yield. And again, words like this, that's important. Those are important words, folks. Those are important words out there. And there can be additional dividends in terms of common stock dividends or the company's profits, and the decision to pay is at the discretion of the board of the directors. Okay, that's the most. Yeah, I mean, this is all the stuff that I'm dealing with, in real time, and in a real deal, not just some fairy tale something. Common shareholders or preferred shareholders have limited rights, which don't include voting. Preferred stock combines debt, features a debt that pays a fixed dividend, and equity that has a potential to appreciate in price. And this appeals to investors seeking stability in potential future cash flows, is what that is. Companies in distress or struggling companies that suspend the dividends, the preferred shareholders might have the right to receive payments in arrears before the dividend can be resumed for common shareholders. So these are some of the legal nuances of all of this. Shares that have this arrangement are known as cumulative shares. If a company has multiple simultaneous issues of preferred stock, these may be in turn ranked in terms of priority. The highest rank is called prior, followed by the first preference and the second preference. Preferred shareholders have prior claim on a company's assets. If it's liquidated, though they remain subordinate to bondholders, preferred shares are equity, but in many ways they are hybrid assets that lie between a stock and a bond, and they offer more predictable income than common stock and are rated by major credit agencies. Okay, so here's a couple more topics here that you want to learn about. And unlike bondholders, failing to pay a dividend to a preferred shareholder does not mean the company's in default, because preferred shareholders don't enjoy the same guarantees as creditors. But that's a legal question, is what that is. So I don't know if the SEC says, like, if it's a preferred shareholder, it's this, or do you just make the deal yourselves between the company and the founders and the investors, and that it could be some combination of all of that. The ratings on preferred shares are generally lower than the same issuer on bonds, and with the yields being accordingly higher. Preferred shares usually don't carry voting rights, although some agreements the rights may revert to shareholders that don't receive their dividend. Preferred shares may have less potential to appreciate in price than common stock, and they usually trade within a few dollars of their issue price. Most commonly 25. When they trade at a discount or premium to the issue price, depends on the company's creditworthiness and the specific issues. For example, the shares are cumulative. There's priority relative to other issuers, or whether they're callable. And folks, again, understanding discount or premium and what that means. Okay, so there's a certain valuation. Now, if you're paying below that valuation, it's at a discount. If you're above that valuation, it's a premium. And then how did you arrive at that valuation? See, these textbooks and a lot of these academic, it's the private banking world really is kind of the Wild West. It's whatever deal that you can make. That's really what it is out there. Okay, so the quicker you learn that, sort of the better. If shares are callable, the issuer can purchase them back at par after a set date. If the interest rate falls, or for example, the dividend yield doesn't have to be as high as to be attractive, the company can call the shares and issue other series with a lower yield. Shares can continue to trade past their call date if the company does not exercise the option. Some preferred stock is convertible, meaning it can be exchanged for a given number of common shares. Under certain circumstances, the board of directors might vote to convert the stock. The investor might have the option to convert, or stock might have a specific date at which it automatically converts. Whether this is advantageous to the investor depends on the market price of the stock. So yeah, this whole thing about callable shares and these derivatives, this gets very complicated very quickly. So that's certainly something you want to keep in mind. I'm just cleaning this up a bit. There. All right, so clean this up a little bit better here. And buyers of these preferred shares, these come in a variety of forms. They can be purchased online by individual investors, but there's also some other examples. Companies can issue preferred shares under almost any set of terms, legal terms, assuming they don't fall foul of laws or regulations. You can't have a contract to something that's not lawful, that's contrary to regulation. You learn that in law school, right? Most preferred issues have no maturity dates or very distant ones. Institutions can be a common purchaser of the preferred shares. This is due to certain tax advantages that are available to them, but which are not available to individual investors because these institutions buy in bulk. Preferred issues are a relatively simple way to raise large amounts of capital. Private or pre-public companies issue preferred stocks for this reason. Preferred stock issues tend to group near the upper and lower limits of the creditworthiness spectrum. Some issue preferred shares because regulations prohibit them from taking on any more debt, or because they risk being downgraded, while preferred stock is technically equity. In similar ways to a bond issue, one type known as a trust preferred stock can act as a debt from a tax perspective on a common stock on the balance sheet. On the other hand, several established names like General Electric and Georgia Power issue preferred stocks to finance projects. So financing a project could be starting the company. That's like the initial financing that you're doing, right? We spoke about equity financing recently. And yeah, we have a couple questions here. What are the advantages of preferred stock, and what are the differences between preferred and a common stock, and what's an example of a preferred stock, all that stuff. A preferred stock is a class of stock that grants certain rights that differ from common stock. A preferred stock possesses a higher dividend payment and a higher claim to assets in the event of liquidation. And in addition, preferred stock can have a callable feature, which means that the issuer has the right to redeem the shares at a predetermined price and date indicated in the prospectus. In many ways, preferred shares are similar characteristics to bonds, and because they're sometimes referred to as hybrid securities. Preferred stock and common stock are both equity instruments. They share important distinctions, and preferreds received a fixed dividend and as a dividend obligation to preferred shareholders must be satisfied first. Common shareholders, on the other hand, may not always receive a dividend. Secondly, preferreds typically do not share in the price appreciation or depreciation to the same degree as common stock. And lastly, preferred stocks typically have no voting rights, whereas common shareholders do. Consider a company is issuing 7% preferred stock on a $1,000 par value. The investor would receive $70 annual dividend, or $17.50 a quarter. That's so 7% of 1,000 is $70 divided by 4. Typically, this preferred stock will trade around its par value, behaving more similarly to a bond. Investors who are looking to generate income may choose to invest in the security. The most common sector that issues preferred stock is the financial sector, where preferred stock may be issued as a means to raise capital. Okay, so we went through that. I know relatively quickly we went through all of that. All right, so that didn't take too long to read. It's a few minutes here. Okay, that's what preferred stock is. Now you have some sense of what that is. Actually, we're going to use that first sentence in our when we get ready to post this. Oops. Cool. I was waiting for that. Okay, but that'll be a good start to what that is. Okay, but that was preferred stock, is what that was. Okay, so a little bit of a background in that, and that's in the notes, in the managerial notes. You guys can read that. Yeah, so we had some good questions here with this stuff. The equity financing we worked on, and I think the next thing is it non-controlling preferred. Yeah, the next one's non-controlling interest. That'll be fast, and that'll be the next video. Will have that, and we'll get to non-controlling interest next time. Okay, let's work on one of the two problems that I mentioned. I think were very important. Let's look at giant manufacturing, and it's reminding me I have to get my wheels aligned a bit. The wheel, they call it truing of the wheel, where the bike mechanic adjusts the spokes. So Giant is a bike manufacturer, and here, actually, let's do this. Let's do a little bit of this. There they are. There's a lot of good versions of this. I mean, these are some of the mine is something like this. I don't have a Giant, but it's, believe me, it's a Fuji, but it's very good. It's this, yeah. See, it's this kind of bike. There you go. That's what I ride. What I have is very nice. Giant is, I'm sure, excellent too. This also costs $1,000. Mine did cost $1,000. Okay, but it's just sturdy. I'm trying to think. Oh, when did I pick it up? 17, 18, 19, 20, 21, 22, 23. But 7 years. Yeah, 7 years. 7 very healthy years and little problems, very little problems. But you need a bike like this in the Essex counties of the world. But that's Giant. That's what a Giant bike is. That's a brand, not a description of the bike. And the company's producing 1,000 of these a month. So we're talking about a monthly measure here. And if you look in the textbook, and I should have had the textbook open, I didn't, and I apologize for that. I should have had it open. Here. And this is whatever, 890 or so, or something like that. Oops. There it is, Giant manufacturing. And so you're given all the numbers just like this. You're given everything here. Right? This is, and it's just all clumped together. You've got to go through. Okay, here's raw materials. That's rent. People putting it together. There's wages. So as we look through and compare it to what you have here. Okay, so direct materials would be number 3, right? That's the first. Number 3 is raw materials. 6 is wages. That's direct labor. And then 1 and 2 are my overhead. Again, on the manufacturing, building, rent, insurance, you're paying that stuff if you make 1 bike or no bikes or 1,000 bikes. Utility costs are also overhead. Miscellaneous materials, again, for manufacturing. 9 and 10 also property taxes. Again, manufacturing, supervisor salary. Advertising is period cost. Supplies for administrative officers, period cost. Depreciation on the office equipment is period cost. And depreciation of manufacturing building is overhead, and sales commissions are period costs. So as you go through these, right, you have to, as you go through them, you have to pick out all the pieces here. Okay. And we're doing 1,000, right? This is 1,000 bikes. Right, that's 1,000. Right, bikes a month. And also this whole, remember we did and let's see if we can find it. We did the problem where we had the, what do you call it? We had the, oh wow, I didn't do all these. Yeah. With the concatenation function, it looks like I have to just type it in. The concatenation function down here, where we linked, we linked this to this computation here. So, right, so what would it be? It would be equals and this string needs to be in quotes. The string needs to be in quotes. Okay, bold that, and we'll fill the rest of this in as we go. But also, I may have discussed this in previous videos. You want to go to concatenation function in Excel, and you want to look up the health or support for combining the cells. Concatenation means to join together or to put together. Again, because I don't know why this, when I do these searches, sometimes it just hesitates like this. I don't understand why this happens, but there we go. Here's concatenation function. There it is, concatenation function, which is here. There we go. That's what I use. So I don't want to unlock. Well, whatever. Okay. So there it is. See the structure of this. So you have a quote, text, comma, variable, comma, quotes, comma, variable, comma, quotes, text, comma, variable, like that. Okay. And then also you want to format text function. Okay. In Excel, and you're getting this Microsoft support. Again, folks, I apologize for this little bit of a hiccup. I don't know why this is taking so long. Usually I'm saying, oh, how fast my searches are. I'm usually saying that, but there we go. And see what the numbers and the dollar sign and all that stuff, the date or whatever, the percentages and just different versions of numbers, scientific numbers, big numbers, leading zeros. Okay. So we're going to use some of that stuff. And actually, we could do a little bit of that here. We can say text, parenthesis, end parenthesis. I forget what's first. If it's the variable first, and it'll be quotes, dollar sign, number, comma, number, 0.00, quotes, comma. Like that. There's concatenate, and here's text. So the variable goes first. It looks like, did I do that? Did I do variable first? I did not. It seems like either one seems to work, though. Yeah, there it is. Okay. And then you have some other pieces to this also here. You would do comma, quotes, parenthesis, quotes, like that. And then we're going to replicate this text function. So instead of me just retyping it, we're going to replicate that, and we're going to use BC73, right? Because that's where that function is, BC73, or the number we want. Paste. Give yourself some space here. That's that number, comma, quotes, right there, like that. And then you want the 1,000 in there. Oops. And this would be BC40. And this is no longer that. This is just, we don't want the $sign, and we don't want decimals. There we go. Like that. Comma, quotes, units. And there, like that. Yeah, there you go. See how now as we compute this, and I'll leave this up there so you can take a look at it. But see, we put quotes, some text, comma, number with a format, comma, this open parenthesis, comma, text again with number formatting, comma, quotes, / comma, text, and then comma, quotes, units, and then a close of parenthesis. That's old programming. It's that's what programming used to look like, was something like that. And you'll see the differences. Here, you have to go into this and change these numbers. As this changes, this one, it just sort of happens. So that's a nice little feature, and then save this as you go. That's a nice little feature of Excel to have something like that. Okay, so, and now I sort of wrote the numbers in as we're sort of sorting through everything, materials, costs, labor. So the manufacturing costs are materials, labor, and then the overhead costs, right? So this is 80. Let's remind ourselves from the textbook. Whatever, 80 per bicycle, and this is commissions are 10, and then 30 to assemble. Right, and then assembling was 30. Okay. So what you're going to do here, delete equals product 80, comma, and you could leave it like that, but here, let's look at this. I want this column for the BA for the 30 and the 80, and I'll lock in that row for the 1,000 so it doesn't move on us. So I can say copy, Alt H V formula, and it gives us 30,000. See? Get rid of the formatting here. See how I did that? So when you go to edit, it's the 1,000 times the 30, the product. These are monthly numbers. So you're going to do, see how do we do it? Oh, well, this is already 2,000, right? That's already 2,000. So that's all set. And this is, again, 750. If it's already monthly, and if it's already a monthly number, you're there. Utilities are 1,000. And this is per bicycle. So again, you're going to come here and you're going to say 1.2 and watch. By locking in that column, you can just float down here and hit return. See, now it's 1,000 times, right? See, what it is, it locks in that 1,000, that reference to that 1,000 in row 40. It locks it in, is what it does. This is 2,400 divided by 12. This is the monthly salary of the supervisor and the depreciation. That's it. Okay, that's it. That's your 119,650. Okay, and also look here. So now we have to go in here. If this no longer snowboards, this is to produce one bicycle. And your snowboard here. Bicycle is there. Right there. And then obviously up here, this needs to change to 119, right? And this is 119.65. Okay. See, we typed all that in. And the total, again, also the total manufacturing cost would be $650. Okay. And you could also design this where this line, would turn in. Now, like I said, would turn into, that would link to that 119,650. Again, if you're doing valuations for acquisitions like I do, you might want, because you might want to go through a couple different versions of valuations, and we thought this, different assumptions, we thought this, we thought that, we changed the time horizon, we made some sort of change to the model, and that did something for us. And these are just, this is just 800. 650, this is equal to 30,000, 1, 2, 3, divided by 12. And again, this is sales commissions. And again, you're just going to copy this. We have it up here, or even here. So as you kept those unit references in a row. So when you got to this thing, right, it's just going to be $10 times 1,000. Okay. So again, if you look back at the textbook, you took these 13 pieces of information. It says prepare an answer sheet with the following columns. We did that, and then compute the total manufacturing cost. We did. Now all these X's, or I don't know what this is, but what a period cost was. You have to identify all the costs, and then you stack them up and get the 119. So you can see our answer matches what was in the textbook. Right there, 119,650 and 119,650. Okay, so this is a shorter one. We're going to do minority interest on the next video, and we'll pick this comprehensive problem piece here. And this will be a little bit longer, developing balance sheets and developing income statements and developing, again, what people are going to pay you to do, right? I like to think that your time with me is spent worrying about that, doing what people, getting things done that the people are going to pay you for. You got to keep that in mind, right? And so that has something to do with you going to college, I hope. And so that's still in the thought process here. So you have the functions. You can look up these functions. Okay. The Microsoft support for text function, the concatenation function. So we did some neat stuff today. And here, let's get rid of this. Presenting. Okay. Folks, today was a little bit shorter than usual, but thank you so much for paying attention. And we'll see you next time.